In a stunning turn of events, Bitcoin has surged past $200,000 for the first time ever this morning, causing shockwaves across the financial world. Here's a deep dive into the implications of this extraordinary price movement. On April 30th, 2026, Bitcoin reached an unprecedented milestone, soaring above $200,000 at approximately 10:15 AM UTC. This remarkable price surge occurred amid heightened trading activity, with over $10 billion in Bitcoin traded within just a few hours. Key figures in the cryptocurrency space, including prominent analysts and institutional investors, have been closely monitoring this momentous event. Analysts attribute this surge to several converging factors, including increased institutional adoption, favorable regulatory developments, and growing retail interest. Notably, this surge marks a significant departure from previous market behaviors, as Bitcoin had been trading in a relatively stable range leading up to this day. The sudden spike has left many traders and investors stunned, especially as it surpassed the previous record of $100,000 set just 6 months ago. The most shocking aspect of this surge is the speed at which it occurred, with Bitcoin gaining $20,000 in value within mere hours, a feat previously thought impossible. This unprecedented event signals a potential paradigm shift in the cryptocurrency market, suggesting that Bitcoin may finally be breaking free from its historical price constraints. The context surrounding this surge cannot be understated. Institutional investment in Bitcoin has surged, with major financial institutions now viewing cryptocurrencies as legitimate assets. Recent regulatory clarity in key markets has further fueled this interest, allowing more traditional investors to confidently enter the space. Additionally, the growing acceptance of Bitcoin as a payment method by major retailers has sparked a renewed enthusiasm among retail investors, contributing to increased demand. The impact of this price surge is far-reaching. It could attract further institutional investment, potentially leading to a more stable and mature market. However, it also raises concerns regarding market volatility and the sustainability of such rapid growth. Investors are now grappling with the implications of this new price point, weighing the risks and rewards of entering at what many perceive as a peak. Looking ahead, this surge could pave the way for Bitcoin to establish itself as a mainstream financial asset. If the momentum continues, we may witness Bitcoin solidifying its role in global finance, fundamentally altering the landscape of investment and monetary systems. The significance of Bitcoin's surge to over $200,000 extends far beyond the cryptocurrency community. This unprecedented price increase has immediate consequences for millions of investors and traders worldwide. Estimates suggest that over 40 million individuals hold Bitcoin, with a substantial portion of them experiencing newfound wealth due to this price jump. The economic impact is already visible, with Bitcoin-related stocks witnessing a dramatic rise. Companies such as Marathon Digital and Riot Platforms have seen their share prices soar by over 25% since the news broke. This surge is not just a fleeting moment. It represents a growing acceptance of digital currencies as viable investment assets. Historically, Bitcoin has been viewed as a speculative asset, often criticized for its volatility and lack of intrinsic value. However, this recent price surge indicates a shift in perception, as both retail and institutional investors increasingly recognize its potential. The influx of institutional capital, particularly from hedge funds and large corporations, underscores the maturation of the cryptocurrency market. Furthermore, this surge is likely to attract even more institutional investment, as companies seek to capitalize on what appears to be a bullish trend, reinforcing Bitcoin's status as digital gold. Politically, Bitcoin's rise may influence global regulatory discussions, prompting governments to reassess their stance on cryptocurrency. Countries that have previously adopted a cautious approach may now consider more favorable regulations to harness the economic benefits of blockchain technology. The average person should care about this surge because it not only affects the investment landscape, but also has broader implications for financial stability and technological innovation. Increased adoption of Bitcoin could lead to advancements in blockchain technology and decentralized finance, potentially reshaping the global economy. As Bitcoin continues to gain traction, it raises questions about the future of traditional currencies and the role of governments in regulating digital assets. This evolving landscape suggests that we are on the brink of a fundamental transformation in how we perceive money and value. In this context, the next year will be pivotal as both investors and regulators navigate the implications of Bitcoin's meteoric rise and its potential to redefine financial systems worldwide. Bitcoin has reached an extraordinary milestone, reflecting a complex journey shaped by numerous factors. Over the past year, Bitcoin has faced significant volatility, with prices oscillating between $30,000 and $100,000. This fluctuation has been influenced by key decisions, particularly the increased institutional adoption by major companies like Tesla and Square. These companies have not only invested in Bitcoin, but have also accepted it as a form of payment, significantly enhancing investor confidence. Favorable regulatory developments, especially in countries like El Salvador, which made Bitcoin legal tender, have set a precedent for broader acceptance of cryptocurrencies globally. This landmark decision has encouraged other nations to consider similar regulatory frameworks, creating a ripple effect in the cryptocurrency market. Historically, Bitcoin's price surges have often coincided with technological advancements and macroeconomic factors, such as rising inflation and currency devaluation. In today's context, Bitcoin's ascent is not merely a financial phenomenon, but a reaction to global economic uncertainties, including geopolitical tensions and economic instability. The motivations of key players, including hedge funds and institutional investors, have evolved to view Bitcoin as a viable hedge against inflation, further amplifying demand. The recent surge in Bitcoin's value can be seen as the culmination of years of grassroots activism, technological innovation, and increasing recognition of Bitcoin as a legitimate asset class. As retail and institutional investors alike embrace this digital currency, its impact on traditional financial systems becomes more pronounced. Looking ahead, the continued evolution of Bitcoin and its regulatory environment will be crucial. With advancements in blockchain technology and a growing acceptance of cryptocurrencies, Bitcoin could solidify its role as a mainstream financial asset, potentially transforming global investment strategies and altering the future of finance. Bitcoin has recently surged past the $200,000 mark, marking a significant milestone in its volatile history. This surge can be attributed to a confluence of factors, including increased institutional adoption and heightened interest from retail investors. Over the past year, major companies, including leading financial institutions and tech giants, have embraced Bitcoin as a legitimate asset class, further legitimizing its presence in the financial landscape. The recent endorsement from mainstream investment firms has contributed to a growing sense of confidence in the cryptocurrency market. Analysts predict that this price surge could attract a new wave of retail investors, potentially pushing Bitcoin even higher. Some experts forecast that Bitcoin could reach $250,000 by mid-summer 2026 if the current momentum continues. However, this unprecedented growth comes with its own set of challenges. Concerns about regulatory backlash loom large, as governments worldwide may feel compelled to impose stricter regulations to control the rapidly growing market. Countries such as the United States and China are already scrutinizing cryptocurrency activities more closely. Investors should remain vigilant for any signs of a market correction, which could lead to significant volatility and affect investor confidence. In the coming days, key indicators to watch include trading volume, institutional buying patterns, and regulatory announcements that could shape the market's trajectory. Additionally, social media sentiment and community discussions will play a vital role in influencing market perceptions. The impact of this surge is not limited to price alone. It could also influence broader financial markets and reshape investment strategies across various sectors. Looking ahead, Bitcoin's ability to solidify its status as a mainstream asset will depend on its resilience in the face of potential obstacles. The coming weeks will be critical in determining if Bitcoin can sustain its upward momentum amidst increasing scrutiny and evolving market dynamics. As we ponder Bitcoin's future, what do you think will happen next? Will it continue to rise, or could a correction be on the horizon? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives.